Well, you could forgive Shekel Brainweigh for mentioning AI in its most recent release to the ASX. After all, it's been talking up AI in its product offering for ages, but it appears to me that they've resisted dropping the bingo word. Despite reporting group revenue up 17.5% in calendar year to date in a trading update just last week, its Australia country manager Danny Nadri joins me now. Danny, hi, welcome back to Ausbiz. Nice to see you there.
Sorry
Yeah,
about
it's
the hot
interesting because we've been
setting.
talking so much lately about any Aussie exposure, ASX listed companies with exposure to AI. And, Shekel Brainweigh kind of slipped my mind through all of that. So I was fascinated to read the trading update. And it's not like you're just trying to sell people on your use of AI. So talk to us about where the strengths are right now.
Look, the numbers are the numbers, and what we're doing with AI is quite different than what normally people think about AI being, analyzing words and text and things that we used to think about 20 years ago. Today, AI is a whole set of technologies, algorithm, advanced mathematics that allow us, and we actually use it on sensors. So we take a lot of data points from sensors on this new piece of tech, which we call a smart shelf. And by analyzing, we artificially create a grid. And this grid allows us to really monitor products in a very smart way. So it's a different way of looking on AI rather than Chat GPT.
Yeah.
And I know the controversy. So we actually use tech in a very different way. We've been using it on sensors for quite a long time. And it's not exactly your Chat GPT AI, but yeah, it's still artificial intelligence in the sense that you couldn't do it. You feel need to do it manually, sensor by sensor. They will be different.
Yeah.
Uh, so yeah, not with the negative AI sentiment, if you
Yeah,
will.
no.
Uh,
I just thought it was good because when market sentiment gets going, you often see a lot of these buzzwords creeping in to announcements. So, group revenue up 17.5%, retail revenue up 41%, medical revenue up by 9%. So, just talk to us about how this calendar year has gone, where the strides are being made.
Yeah, look, 2 years ago, this is quite interesting in the terms of a business that was very product centric. We made really good sensors, really good weighing, and anybody who wanted to sell, to buy it would buy. We now said 2 years ago, we actually want to turn the company into a customer centric or market centric, if you will. We want to sell predominantly to retail and do promote retail automation solutions, and deal with self checkout, to bring solutions like smart cards, smart fridges, allow people to shop for products much better. And seeing this 8 quarters later, that this is the main driver of our growth, 41% on the retail side. Most of it comes from Europe. And remember, Shekel sells to 5 out of the top 10 providers of self-checkout in the world, and we do it better with a faster sensors and a more accurate sensors, and that allows us to be positioned as a leader in terms of a provider to this market. And that's where most of the growth is coming from. We also see really good demand for our smart fridges, and actually a new activity regarding the smart cart. This really smart car, really funny cars that you can actually put products in them, and the transaction is completed on the cart. So in pretty much all the 3, 4 elements of our products for the retail, that's where we see the growth, and that's where we're happy to see this continue. Back in January, management presented to the board quite an ambitious business plan that says we want to grow and at the same time reduce the cash burn. And going into the first 5 months of the year, we actually overachieving on our internal numbers, and that gives us the confidence that Q4 is already positive EBITDA.
Yeah.
So that's where we're heading.
Okay, so what needs to happen between now and then? Because we continue to hear about, well, first of all, a slowdown in consumer spending, but also earnings revisions likely to come through, a slowing European, a slowing US economy. Are you seeing signs of corporates pulling back on their spend? Or is the flip side of the coin, they can save money by deploying and make money by deploying some of this automation?
So yes, first of all, the answer is both. the automation that we provide actually helps retailer improve their lines. And when you look at these massive retailers and they're selling billions, they're always, billions of revenue, but then 3% over the line or 1% below the line. So when we provide automation that helps them improve on this, then actually that helps them become more efficient in their operation. That's also a global demand. It's people want to shop better. They're used to now doing it more seamlessly. So I think these solutions are just coming to market because they'll be there, and that's what the consumer demand. Somebody told me once that when the economy is down, people are buying less fancy car, but they continue to eat. So we're still at grocery retail. So possibly, even if we don't buy fancy cars or more houses, we'll continue to eat. So maybe we're in the right market then.
Yeah, right. Good. Now, tech has got a little bit of a tailwind right now. Everybody's very enthusiastic about the fact that we may be closer to the peak cycle for interest rate hikes. Danny, what are the conversations that you're having here in Australia like? Are people getting the tech now?
Look, I think we need more analysts, more experience with more companies doing well. So people will appreciate the fact that in the last 30 years, the main driver of humanity, if you will, was technology improvement. So I hope that we'll get it here more. It's still, in my view, a very natural resources market. But we try to do more in explaining that we want to be present in Australia. We just received our first container of 18 smart coolers through a distributor in Sydney. So we hope to see more of them in there. And I think the more people will experience the fridges, the technology, the more they'll see that it is actually convenient. They'll appreciate the tech behind it. They'll appreciate the fact that somebody had to develop this thing in order to bring it to market and to make everybody's life easier. I think we're on the path. I think that's happening more and more. I read more about technology and startups and new ventures in Australia, so it's good. We just need to do it more.